What's going on, everybody? Welcome to episode number 9 of the Traders Podcast. I am your grateful and humble host here, Jeremy Hritz. Very excited that you're coming back, joining me for episode number 9 as we push through 2024. We are in my favorite month. It is March, and I couldn't be happier. This is Make It Happen March, where we're going to get after our goals and just push ourselves to achieve things that we know are possible, but that require the work. So hopefully you've been getting after it this month. Hopefully you're happy, you're healthy, you're satisfied, fulfilled, your family is happy, satisfied, and fulfilled, and that you, if you are trading and investing, that you're doing a great job with that. We've got a packed show for you today. I know last week I started a new segment that I was calling 3 questions, but that's just too boring. And so we're renaming that Ask a Trader. So we're going to kick that off here today. And then we're going to do a little case study. We're going to be looking at one stock over the course of the next several months just to see how it plays out. And that stock is ROKU, ROKU, if you're looking for the ticker name. And I think it would be fun just over a period of time to see how it plays out. What happens with that stock, Roku being a creator of streaming services, televisions, and they're in a significant downtrend right now. I do have a position in Roku, so I thought it would just be something fun for us to do to talk about. And then today's topic, we're going to talk about the Federal Reserve and the current state of the American economy with interest rates. What does it mean when interest rates are up? What does it mean when we cut rates? And so I'm going to get into all of that here today, and very excited to do so. But just wanted to point out, I'm currently teaching a profitable swing trading class. Shout out to everybody who is part of that class. And coming soon, I'll be teaching an Options 1 and 2 class. Options 1 will be in April. Options 2 will be in May. And then in June, I'll be teaching my day trading strategies course. So just putting that on everybody's radar. Please be on the lookout for the advertisement about that. That'll be coming up on my Facebook page. But looking forward to teaching those classes. And options are a great tool to bring in passive income, but also to generate money through trading. So very excited to teach those classes. Stay tuned for more information coming about that. And so it's now time, and I thought I would break out my guitar here for the Ask a Trader segment. And I got to use a different chord than that. We need something upbeat. It's the Ask a Trader. So here we go. I've got 3 questions from all of you that I'm going to go through here today. And one of the questions that I get all the time, and I have this after someone who's been watching the show, Jeremy, what about taxes? I hear that a lot. People are often like, man, you're making money, you're going to pay taxes on it. Well, I would rather have money to pay taxes on than not have jack shit. Okay? Just being completely candid. And so the way it works, you're going to pay taxes on your short-term capital gains if you're a day trader and swing trader. And really how that works is whatever income tax bracket that you fall in, let's say that it's 28% based on what you're making during the year, that's where all your trades will be taxed. So it's really not that big of a deal. And again, I'd rather be generating profits that I can get taxed on rather than generating nothing. And I will tell you this, I'm not a tax expert, but you have to make sure that you have a great tax accountant, somebody who knows what they're talking about, so that you can maximize your profits during the year and also take advantage of any tax write-offs that are available to you. So again, make sure that you have a good tax accountant. And yes, make money so you could pay taxes on it. It's a good thing, right? The next question for the Ask a Trader segment. What's your favorite company to trade? That changes every so often. I do like trading ExxonMobil, XOM ticker symbol. It's fun. It's not a fast mover, but I just have a knack for trading it. But recently, and this even goes back to last year, NVIDIA has just been a stock that I have, again, just a knack, a penchant for trading. And I probably take a trade on NVIDIA every day because it moves so quickly, $1, $2, $3, $10, $20, $30. And you could just capture a couple of those dollars. You have a 500, 1,000 shares, you're making a nice profit. So I often thought about getting an NVIDIA hat or an NVIDIA shirt. So anybody out there watching looking for a present for me for an upcoming holiday or birthday, take an NVIDIA hat. So let's see if anybody's paying attention out there. And then the final question, I always get questions about losses. Do you get upset about losses? Well, I'll tell you this, I still lose. Every week I'm losing trades, right? But my winners, I have more winners than I have losers. And yes, I still do. I hate it. I have not come to peace with losing. I'm working on it. It's a daily struggle, and I'm better about it than I was when I first started, but it never feels good. And there's always that moment where the doubt's going to creep in and you're thinking, "Man, I can't do this, blah 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 blah." And you just have to talk to yourself and remind yourself that been here before. I'll be back the next day. So it's all a psychological thing. But yes, I still get upset about losses, but I try to get over that pretty quickly and move on, because if you dwell too long on a mistake, you're going to miss out on so many opportunities that are out there for you to take advantage of. So, losses are part of the game. I talked about being a good loser. It's not fun, but it is what it is. All right. And so today's topic, talking about the Federal Reserve, the American economy, what's happening right now in the markets, and just to give you the landscape of how things are unfolding and things you can pay attention to over the next several months, and just really focus in on how that's going to impact the markets. And so if we go back to COVID times, 2020, everybody remembers that infamous year where we were all masked up, we were all indoors, we were all home. I was a principal at that time, leading and performing my duties over Zoom. It was crazy, right? And during that time, there was a lot of stimulus that was pumped into the economy to really just help prop up society. And that created inflation. And during that time, 2020 to probably January 2022, the American markets were in a strong bull market where things were just going up and up and up and up. But eventually there came a point where all that money that was pumped into the economy as a result of COVID, what that did was it increased inflation, and that forced the Federal Reserve to have to take steps to get that under control. Now, if you remember back during that time, mortgage rates were extremely low, and there are probably several of you out there right now who may be locked in a rate at like 2%, 2.5%, 3%. And you look at rates now, they're extremely high, 7%, 7.5%, 8%. What happened was the Federal Reserve, led by Chairman Jerome Powell, the way that they get inflation under control is they have to raise interest rates. And so for such an extended period of time, and this was partly due to COVID as well, the Fed decreased interest rates. They lowered interest rates. And when inflation crept up, the Fed went about the fastest rate hike cycle in the history of the United States. And when you're increasing those rates, guess what happens? It puts more pressure on the American consumer. It puts pressure on the American consumer in terms of borrowing, because now when they're borrowing money for a loan or they're using a credit card, they're going to pay a higher interest rate. And you're seeing right now in the housing market, because the rates haven't been lowered yet, that there isn't a lot of inventory because people aren't selling houses because they know people don't want 7 to 7.5 to 8% mortgage rates, right? And so it had to be done. The interest rates had to be raised. Otherwise, inflation would be out of control and you'd be paying a ton for a gallon of milk, for a carton of eggs, for gas, more so than what you're paying now. So it was a necessary evil. Those rates had to come up. But now we're getting to the point where over a period of time, since January 2022, when these rates were increased, we're seeing slowly, consistently, steadily, those rates are coming down. And once a month, you will get the CPI report, the Consumer Price Index report, which gives you the inflation number to show you, okay, month over month, year over year, how is the American economy doing in terms of inflation? What you're seeing, and there have been some hot reports here and there, but inflation has come down. Now, prices are not what they used to be. So let me make that very clear. But in terms of how it's calculated and measured, it is coming down. And now the Fed has a goal of hitting a 2% inflation rate. And when that happens, what happens and what must follow a rate hike cycle? You guessed it, it's a rate cut cycle. Okay. You're not going to keep rates that high for too long, because what you risk is damaging the American economy, pushing it into a recession, which some people believe still could happen, and really just putting undue stress on Americans. And so those rate cuts are going to happen, and it's been stated by members of the Federal Reserve that rate cuts are coming this year. We just don't know when. And so the bull market that we're seeing right now is driven much by the enthusiasm and excitement that, hey, these rate cuts are going to start to happen, and consumers are going to have more money. They're going to be paying less interest. And you're seeing that enthusiasm in the markets as we climb higher. Now, in terms of when those rate cuts are going to happen, initially, traders and investors were pricing that in for this March, but we had some hot inflation reports come in. So it got pushed to May. And then we got some more hot inflation reports that came in, which are just normal. It's going to happen. You're not just going to go straight down. And so right now, the first rate cut is being priced in for June of this year. And what we should see is at least 3 rate cuts before the end of the year. And what that will do is just put less pressure on Americans who are borrowing, who are taking loans, the payments that you're making on your credit cards. And what we should see as a result of that, probably an initial pullback in the markets, but because more money is going to be with the American consumer, that will flow back into the markets, and we should continue to go higher. So something to pay attention to over the next few months is what is going to happen when rates are cut, or pay attention to the inflation reports that come out. So we actually get 2 inflation reports next week. One is Tuesday, March 12th. The other one is Thursday, March 14th. And watch how the market reacts and responds to that, because they are significant drivers and catalysts in the market to push it up or to push it down. If it's a good inflation report where inflation's coming down, you're going to see the market rally. If it's a negative inflation report where inflation's coming in hot, you're going to see the market tank. So pay attention to that and watch that. And just watch over the next couple months, those reports come out, and see when the actual rate cuts happen. So it's a fascinating thing. I didn't know any of this stuff before I started trading, but I'm a little bit obsessed with it now. But just wanted to give you that background information on rate cuts, how things are working with that, and hopefully you have some interest in checking that out. And with that said, I told you we're going to do a little segment where we start doing a bit of a case study here, where we're going to look at this company called ROKU, right? And I'm going to share my screen with all of you. And this is ROKU's chart right here, the candlestick chart. And again, we could see here, if we look at their business, they typically put a description on here about their business. It says ROKU engages in the provision of a streaming platform for television. It operates through the platform and devices segments. Platform segment includes digital advertising, related services, yada, yada, yada. Okay. So I have a Roku TV, right? And I know a lot of people who have Roku products. And so I'm always looking for opportunities and values where a stock is beat up and potentially could have an opportunity to make a run. And so let me actually just go to a clean chart here on Roku where we don't have all those lines. And so here's just a daily chart on Roku, right? And we're just going to go back in time, and I'm going to draw what is known as a trend line here on Roku, where typically if you go back in time to December of 2022, you could see that Roku will hit this area and bounce, okay? Come back down into this range and bounce. Come back down and nearly hit that trend line and bounce. And now, as of recent time, Roku is back in that same area, okay? And you could see here that on earnings, it did not have a favorable earnings report, and it gapped down, and it dropped from a high of 94.50 all the way down to the low that we actually put in today. So down $33.38. But if you go back to look at this, when was this? This was in December. It hit a high of $109. And if you go look all time on this, Roku actually was at one point in time a $490 stock. So there is some opportunity here. And so what I'm watching for is Roku by June of this year. I'm looking for a similar bounce to take place. Okay. And so I have a small position on Roku using call options for June. Call options are basically you're buying insurance on a stock and it can generate you money. Okay. And it doesn't require as much capital in terms of purchasing shares. But my thesis here, what I'm looking at is because we're hitting this trend line that has been very strong over the past years, and because we're in a bull market, that I do see Roku recovering before the end of June. And I'm not saying that it's going to get all the way back up to the highs that it hit here in December, but even if it gets close, that's going to be profitable. And so what I want to do over the next however many episodes until June, we're going to see if this plays out. So June, that gives us March, April, May, June, 4 months to see if Roku can recover enough to get back into the 90s to that $100 mark. And I think it can happen. And that's why I have an opportunity set up here. Let me just mark the end of June right here, the 28th. So we're just going to keep an eye on this to see how this plays out. So I will keep you updated on that. That will be a segment here on the Traders Podcast. Roku, check it out, learn more about it. And we will revisit that as we continue with our episodes here. So that's going to do that. That's going to do that. That's going to do it for episode number 9 of the Traders Podcast. My gratitude and appreciation to all of you for joining me here today. I really enjoy doing this podcast, and the fact that you watch it, share feedback, leave comments. It means a lot. Brian Gires, thank you so much for dropping the positivity in the comments of the last show. If you watched to the end, I gave you a little shout out there. Shout out to Sam for a nice winning trade the other day. Shout out to Sean for getting funded. And that's it. I'll see you back here for episode 10. Have a great week and take care, everyone. See ya.